Hello, everyone. Big red week, two major red events, probably one of the biggest Fed meetings in a long time since they're switching gears and a lot of different expectations, plus followed up by the NFP, which is going to confirm the Fed is doing the right thing or it's insurance or the beginning of easing. So you have 2 days where you have major red events and the releases. I don't know about you, I plan to be flat for. Uh, Looking at this market here, I don't have a lot of ideas off the bat. The dollar, can I short the dollar? No. Uh, can I buy it here? Yeah, but I feel like I'm chasing it. So I just want to, hi, Claudia, Itai, how are you? I just want to concentrate on what the Fed is all about. The Fed is all about rates, right? And what does the Fed control? Do they control the long end? They do when they're doing QE and they're buying bonds. But I was thinking about this expression that everyone knows, goes back to Marty Zweig, don't fight the Fed. So, uh, most likely fighting the Fed in equities and the S&Ps, which made new all-time highs last week. But when you think about it, are you really fighting the Fed if you're shorting the long end of the curve? First of all, they haven't stopped QT. There's another month of QT. So that's not fighting the Fed, right? And why is the Fed lowering rates? My opinion is that they're freaked out about the potential inversion of the yield curve. So if you're shorting the long end of the market, you're really with the Fed. They want a steepening to occur on the yield curve. And just looking at the charts, here's your 10-year and here's your 30. And they're both, right about the same. I don't think the curve has changed much. But when you look at, say, the 10 years, the chart of the 10-year rather than yields, this looked pretty, as Ellioticians, it was a beeline from here to here, and we're correcting. Are we going to blow to new highs on a Fed announcement? Could, but this is something that may make a new high where the S&Ps, everyone's waiting to short the S&Ps at 30, 40, 30, 50 for weeks. And, I see the reasons why, technically, why it's worth a shot up there. It's just, I'm a little bit skeptical since everyone's been waiting for this short into the Fed. Could it be this pat? But looking at, here's your 10-year, big break, maybe a bear market rally. But this is one of my prime candidates for shorting after the Fed because it's really with the Fed, the long end of the market. So here's your 10-year, and I believe this is your 30. Yeah. Okay. Already getting kind of a negative candle here. It's retraced more than the 10, but it looks like it could be a failing rally. Now, I'm not talking about yields going back to 3.25, but I do think that 220 is possible. So here's why I think it could be. Up here is a big wedge line in the 10-year. It's up here, right around the 220, 222 level. So we'll see. To me, this is one of my prime candidates for shorting, especially if they go with a half. And then something else I'm looking at, and I know it's contrary to a lot of people are looking for gold to pull back to 1380 and make another go, and that's very possible. But you know what? Is it going to be bearish, the metals, at least on the initial response of an easing? And how much will the dollar come off? But, gold's been rallying with a strong dollar for a long time. I'm actually looking for a 1, 2, 3. And if I have non-confirmations, which I've already had one in gold on the daily time frame, another rally to new highs in both gold and silver, I may take a short attempt. Now, gold looking weaker than silver, but I think that what we may be getting here and that's why gold's acting better, is the gold silver ratio. The first wave down might be completing here, and I'd be looking for a rally. It's up a little bit today, up around this 90 level, some type of retracement. This was one heck of a move, very directionally. So if we're going to rally here, that means the gold's going to be stronger than silver during this retracement. And then once it gets up here, if you're looking for a resumption of this trend that may have just started after many months, once we get up here, I would be taking a shot at another wave to the downside, which would make gold the preferred short if the metals are going to come off. So those are a few things I'm looking at. I really don't know what to do with the yen. I can't short it here. It almost looks like, wants to come out of here. So, maybe this was, a 1, 2, 3 with a 4, and we're going to get a 5. I didn't buy it down here, but the yen is also saying something about the bond market. If the yen is heading higher, normally that would be bearish for the bond market. But if we're going to get one more rally in gold and silver, that would mean that the yen's going to come off again. So a lot of if this, then, and, I learned a long time ago, and that's one of the reasons I'm with the team, is that the people on this team, they have different perspectives, different views, different trading opportunities that they see. And for me right now, sometimes the right trade is no trade, and that's where I'm sitting. And you know what? If I go a whole week without doing anything, I don't think the FBI is going to knock on my door and take me away for not trading this week. And, one thing to keep in mind is that I guarantee this, that the markets will be here the week after this. So make sure your equity is to take advantage of it and try not to play roulette, which is binary outcomes of red releases, which happened twice this week. So, I don't want to have to force my trading in between 2 days and then out and then 1 day. So it's possible I don't do anything. And if I do, it's very short-term day trading, scalping, not holding anything into either of these releases. I'd rather be, call me a chicken. I believe prudence over valor. I don't need to be a hero anymore. I've tried that in my career, being a hero, and have had my teeth kicked in enough not to want to really do that anymore. I mean, how many times you have to get hit in the head with a ball peen hammer to know it hurts, so that you stop doing it? So, Blake is back. The team's in full force. You're going to be able to trade the Fed live. Paulie does his second webinar of the day around Fed time on Wednesday. And then you'll also be able to trade the NFP with us here in Face on Friday. So a couple of big days, and we'll have, the whole team or the majority of the team around to give you their what they're seeing after these events happen. Blake put out a great week ahead video for things for people to look at into these two events, and Blake's probably very recharged after coming back from Wisconsin. So, how are you today, Blake? And
Hey, Coach.
What are you thinking into this week of two big numbers?
As I stated in the week ahead video, I mean, I'm waiting for Wednesday. I
Okay.
don't really. I'm kind of like, I want to say I feel exactly the same way you do. It's a situation where the dollar is gonna, it's very pivotal. Whatever happens post Wednesday is the direction I'm going to go with, and I don't have any. I really don't have any uh,
Crystal ball?
opinion. Yeah, well,
You
like
almost need one.
no, it's more. Yeah, it's more like I don't necessarily. I mean, I haven't. I guess I have opinions. We all have opinions, but what the dollar does following Wednesday is going to dictate what we do in the follow through that we have probably throughout the remainder of the week. Um, So and I'm not opposed to buying the dollar here if I get indication on Wednesday that it's time to do so, and short the euro and try to take it down below 110. The
Okay.
flip side is if we're disappointed, and dollar bulls are disappointed, and the Fed's maybe pretty dovish, maybe the euro, goes back above 112. So I don't mind trading it either direction from here.
Right.
But because I agree with your sentiment right now, buying the dollar right now doesn't make any sense to me at this very moment, because it feels like we're chasing.
Right.
Flip side is you don't want to fade it either, because it's pretty strong. And I built the case over the weekend. If you look at this weekly chart, that I'd been selling the dollar up here for the last couple months, against the 618 retracement. And then, I mean, even though we haven't had a big swoon in dollar weakness, it's been easier to trade it on the short side against this big 618 retracement. But now we're here again, and we know this is such a pivotal area. If the Fed does, if the Fed is just, more hawkish than the market expects, there is room for another leg higher.
Yeah.
There is, especially after all this consolidation, right?
Yeah.
I mean,
Yeah.
we've been
You have a
consolidating.
lot of fib extensions above the market that it could go to.
Oh, I firmly believe so. After consolidating here pretty much all year, I mean, we haven't gone anywhere since the beginning of the year. Nowhere. We've been trading between 96 and 98. Basically, I mean, roughly 96 to 98.
Tightest range I could remember for this long a period of time.
Yeah, I mean, you look at the dollar and go back, and you're not going to find these types of consolidations that often. I guess back here in 2013, we had a decent consolidation right here, but look at what the breakout, brought. So if you go, here's the last consolidation we saw that was pretty good. It's about the same amount of consolidation that we're at right now. So we are probably at risk of a big move. It's hard, this is one of the things that, in my opinion, it makes the dollar actually possibly a good long, is because I don't see it as being a good long. Like, I have a hard time arguing the fact that I want to be long the dollar, knowing the issues that are plaguing the dollar moving forward. Also, one of the other things that I'm a little concerned about is the dollar has been the euro has been a funding currency, and so if we do have some risk off, is the dollar going to be bought on any risk off, or are we going to have the euro actually reverse its course? And that's something that kind of lingers in the back of my mind quite a bit.
Maybe the hint was the ECB, because when the euro started to rally after the ECB, although it was short-lived, the stock market sold off at the same time. I'm not saying that I'm just saying that maybe, look, the market's at new all-time highs. The dollar's not far away from yearly highs. It's almost like the market has, even though all the multinationals complain about dollar strength, it really hasn't hurt the market. So maybe it's a dollar coming off that makes dollar-denominated assets not as attractive.
So that's the thing that I'm wondering is, let's just say, Dale, stocks sell off, and they do from here. Let's just entertain that idea. Which, I mean, you look at the stock market; it's hard to be bearish while we're above 29.60. But let's just say the stock market reverses. Does the dollar reciprocate and get stronger as people, are looking to towards risk off, or does the dollar actually weaken and the euro strengthens, as you see, dollar denominated assets, as you point out, not as attractive anymore? And that's a question, because, and it's a hard answer to come up with, because we haven't seen any type of risk off in forever. When's the last time we've seen, so the market, reverse its course? Now we did have, this temporary reversal here. And if I remember correctly, and let's take a look at this. This is the S&P.
Right.
Let's compare it to the dollar really quick. Okay. And as we saw this sell-off in the stock market, you'll notice that the dollar actually weakened through here, right?
Yeah.
And I remember explicitly saying this. And I don't know if you recall, but I remember, I'm like, people were wondering why the dollar wasn't gaining strength, and I'm like, unless the market feels the wheels are going to completely come off the bus, I don't think the dollar is going to strengthen. And that may be the case again. If we see a situation where the market sells off like this, okay, the dollar may not gain strength. Now, if we really, like, let's just, and I'm exaggerating here, but you can get my drift.
Yeah.
Let's say we drop through 2,500 and we head down towards 2,000, and we have a serious pullback in equities. I think the dollar then at that point in time may start to catch a bid, because I remember the last time that the market did this pullback, the dollar didn't strengthen.
Right. Okay. Interesting.
Yeah.
So we had like about 2 hours of that happening after Draghi last week when you were in Wisconsin.
Oh, we had 2 hours of risk off.
Dollar weakness, and when the euro rallied back to 111, 112 after Draghi, the S&P sold off about 15 handles.
Oh, and that was it, huh?
Yeah.
Oh, I guess this was it. It. I was in Wisconsin, and I would have been on the webinar had my my internet not been so horrible. It's interesting. You go to these. I'm in this obscure town in the middle of nowhere, really, in Wisconsin, and the internet was just absolutely horrendous. So I was in the chat rooms a little bit, and I managed to do my analysis in the evenings, because I could take pictures of charts and then do analysis and upload them at a little bit. I didn't mind if it took a little bit longer, but man, some of these obscure areas that you're in, it's just it was hard. Internet was very shoddy at that point, but anyway, so Coach, how did everybody react during this sell-off during following Draghi? Because the reason why the market came off is because Draghi wasn't as dovish as the market wanted, right? Well, he might have just stepped away. Well, anyway, but I think that's what happened here, is we saw a little bit of a pullback in equities. Matter of fact, is Stelios here this morning? I'm not even sure if he's in today or if he's out. He might actually be out traveling. I think he is out traveling as well. Wow, we've got a lot of people that are gone right now. Steve's out traveling, but Steve will be here today, as he's out. But let's talk a little bit about where we're at with the rest of the market. Let's talk a little bit about the cable, because the cable is actually trading really heavy. We had this descending wedge, and this is something I've been monitoring quite actively, hoping that we'd get some sort of reversal. Whenever we see a descending wedge, I always think, okay, I got to start being on the lookout for a reversal. But we actually broke lower. We broke through 2019 lows, and I want to congratulate Amanda in our chat room. She's one of the very few people that I've seen that continuously has been shorting the cable and has done really well. And if you guys here, I'm going to pull over our chat room. You guys can say hello. You guys are on Jumbotron. This is our chat room that we have that's exclusive for the ForexAnalytix community. Amanda's been really killing it in here with the cable, because I've been in the camp of, well, let's see if we can get some sort of positive news in the cable or in the UK, and we should all have already known in retrospect that with Boris Johnson at the helm, that it's probably going to lead to a hard Brexit. So, and you can see everybody's chatting in there. But the fact of the matter is, she's been shorting the heck out of the cable, and it's been hard for me to look for shorts when we've gone so far. Yet it continues to drift lower, and I've actually read some reports, and I'm gonna take the chat room off here, guys. All right. One of the things about the cable is that I've read a lot of reports is, banks are actually looking for the cable to trade down towards 110 on a hard Brexit, and maybe even lower, closer to parity, which, if you think about, where we've gone and where we could go, there's a lot of downside here. I mean, you have to realize that we were trading at 119, and for us to break below 119 in the event of a hard Brexit, I don't think that's too far off. I mean, if you look from like a Fibonacci extension, the 127% extension puts us at 112. 161% extension of post Brexit lows puts us down at 103. I don't think that that's too far off should we actually have a hard Brexit. And you can see the market is preparing us for that as we continue to push lower. Dale, I can hear that you've just come back, but I was just talking about how Amanda in the chat room, she's been really all over this this cable short, and it still looks like we can see some further downside here. I don't think there's any reason to be buying the cable at this point. You have to be selling rallies until proven otherwise, and I think that's the way. I think that's the way that you have to be, trading the cable from here on out.
Even look at EG. I mean, that was a pretty shallow retracement. I was lucky to get out at 89.
You did get it. Oh, well, that's awesome. Actually, and that right after Draghi, the ECB the ECB rate decision, the cable, or the euro reversed. We actually posted a hammer.
Yeah.
On Thursday.
Right.
We posted a hammer here, and then it's just been, ripping ever since. And yeah, the euro pound looks like it's going a lot higher. I mean, these pullbacks have been extremely, extremely shallow. And I would just hate to be long the cable right now. I'm sure at some point the pound's going to be a good buy. I just don't know when that is. And, it's obviously going to be post, post hard Brexit, I'm assuming. So, I think the key here is you just start, just looking for shorts in the cable, and just
and Amanda's great, by the way, and what a great pickup for ForexAnalytix.
Oh, she's been awesome, and I know you probably stepped away from your desk for a moment, and I was just telling everybody, and that I don't know very many people that have been shorting the cable. Throughout the decline of the
she's had conviction for months about this,
for like the year. I mean, she's just been nonstop, shorting the pound, and I think that's it's awesome. And I know for myself, I've been looking for just reasons to buy it, but I've been leaving it alone because technically I need something to convince me that it's time to trade otherwise. And every resistance that I have, it just, I have to move it lower and lower and lower. And we're going to get to a point where, and we're breaking, like I said, 2019 lows. We're getting to a point where it could really start forcing liquidation in a lot of these, in a lot of these pound pairs. We're at this stage, as long as we trade below this 123.70, there's no reason to be on the long side. Now that we're below these spike lows here from early 2019. So anyway, the cable, is trading obviously extremely heavy. The Aussie, this is a failed breakout attempt. We rallied to the 200-day moving average and reversed. I thought that maybe the Aussie back above this this trend line was going to I was going to be able to play this on the long side. I think I tried to play this on the long side, not last week, but on this dip, and then I just got out real quick. I didn't stick around, but the Aussie has shown failure here. Notice how how we've made a lower low. So we made a higher high, now a lower low, and now this has shifted the trend back to the downside, and this is the problem that I have with looking for dollar shorts now, is you're seeing even pairs like the Aussie that have been holding up pretty well, reverse course. The Kiwi hasn't made a lower low yet, but I'm assuming that's coming. I'm assuming the Kiwi below 60, whatever that is, 65, 60 is probably going to happen in fairly short order. Obviously the euro is going to have to get below 111 in order for that to happen, but we could probably see that as early as this week. So playing the dollar on the on the long side, or on the short side, excuse me, is really tough when you're starting to see these pairs show these reversals. So anyway, just some food for thought. I'm actually long a little dollars. I'm long some dollar Mexican peso. I am looking for an eventual break higher, above 1920, maybe above the 200-day moving average as early as this week. It is something that I've been playing. If you are a ForexAnalytix subscriber and you see the patterns in play, you know that that's something that I'm currently doing. And I built the case this weekend on the week ahead video for a stronger US dollar Mexican peso, especially if the market does not get as dovish of an FOMC as the market's hoping for. If the Fed is just not as dovish as the market wants, we could see the dollar really rally against most currencies that we've been talking about, but really the dollar could strengthen against some of these emerging market currencies like the dollar Mexican peso, especially if stocks start to come off, because the Fed just wasn't as dovish as the market hoped for. Excuse me. One last currency pair I'd like to take a look at is the dollar yen. The dollar yen, we had this inverted head and shoulder pattern, and I'm going to delete this drawing here because, frankly, we have negated that when we came below that right shoulder. But 109 is still pretty big resistance, and looking at the dollar yen, I mean, you look at this consolidation that we see here. This is a pretty big consolidation, and if you start talking about the dollar, strengthening, could that lead to the dollar yen above 109? It could, but if we see some risk off, maybe the dollar yen actually reverses here, pulls back from the 109 and change level. But more importantly, you see all the other yen pairs really come under pressure. And I'm not going to go over those because I would like to leave a few things for Steve to talk about, because I know he's roughing it there when he's traveling. Steve, are you around? Is he not coming in today? Let's see.
I don't know, Blake.
Yeah, me neither. Let me see really quick. I don't know if he's coming in today. He may not be coming in today. I thought he was going to be coming in. So maybe he won't be. Huh. Oh. So we got Steve and Stelios out today. Well, it looks like I'll be hanging out with you, Dale.
Okay, buddy.
Hey, so let's talk a little bit about precious metals here. So with precious metals, refresh me what you were talking about with gold and silver here.
Okay. I see the potential for a 3 drive. A lot of people are, I looked at Gregor's count and stuff. If we go down first, it's a buy, but if we rallied up there, you can tell like the second drive that we had at the high of the move, look at the RSI you have, the glaring divergence.
Right. Okay.
But that's only one.
So
I need a couple.
you would be talking one. Yeah. Here, let me go ahead and keep that in drawing mode.
And then the high of the move is 2.
This would be 2, and so this one would be 3.
Yeah, and some Ellioticians would call it an ending diagonal if that happens. 3 drives are, I've noticed. I don't know Elliott, but a lot of things that I call 3 drives, Ellioticians call ending diagonals. So that's what I'm thinking up there. And the gold silver ratio looks like it's, it was a hell of a move in a week and a half from 93 to 86. So it looks like it could bounce. And that means that gold will outperform for a little while the gold silver ratio is recovering. So they both look pretty similar. But if you're a believer that the gold silver ratio has really turned, then when you want to be bearish precious metals, gold's your preferred short, and when you want to be long precious metals, silver's your preferred long.
Hey, real quick, Coach.
Go ahead.
Pound is absolutely just crushing it right now. So remember we were talking about this forced liquidation. I just mentioned the term forced liquidation. We are getting to that point where the cable is just going to start whacking. It's like a whack-a-mole here. It's just taking out stops, but we are at 161% extension. Let's just remember the fact that we are at 161% extension of the last move higher. I sure as hell wouldn't want to be chasing the market on the short side here, but if I was short, I would probably be, if it was an intraday trade, I'd be covering up some here. Whenever we get to the golden fib, that's usually my cue. It's like, okay, well, let's take some off the table.
Paulie said he's going to be joining us, Blake.
Yeah, he's going to join us in about 10 minutes or so, which will be nice for those of you that don't get to listen to Paul Franco. He's obviously during the European crossover, he's broadcasting while I'm fast asleep. So it'll be nice to hear Paulie's take on some of these things, because he actually has been putting up charts in the chat room all day, talking about this cable move. So it'll be interesting to hear his take. But what I'd like to do, I would like to go back to the gold and silver converse. Actually, let's watch this cable just a little bit longer.
Okay.
Man, look at that hourly candle, and look at this RSI. I mean, we are like obviously pretty beaten up. Matter of fact, one thing that I'm gonna let me take a look at something. Whoops. Let me grab it from over here. Give me 1 second.
Okay.
I want to take a look at the DSI that was reported on Friday, because I was traveling, so I didn't get to see it. So I'm going to pull it up myself right here, even though I cannot show it due to copyright reasons. The DSI on the cable is at 10, which is scary. The sentiment is obviously very extreme bearish right now, so it's hard for me to it's just another reason why I have a hard time chasing it on the short side. Doesn't mean that it should turn around, but we're getting to levels that we start heading into the 10, 8, and I've seen DSI dip into the sixes before. So it's not something that can happen. I mean, when you're talking about the pound and you think about like a DSI at 6, give it a couple of days. If we're trading down at 120, it may be at it may register a 6 or a 7 on daily sentiment index. But the fact of the matter is, we could get down there. We could actually drop a couple hundred more pips. All right, going back into sorry, I'm gonna I hate to be jumping around on you guys, but let's go back and talk about this gold and silver move, because I find it pretty fascinating. If the dollar strengthens this week, all right, and we see the dollar continue to strengthen, let's say the euro drops down towards 110. My 2 cents is that the gold will not give us that three drive that you're talking about
Right.
Dale.
It'll go
I think
down.
that gold will pull back towards 1380, and that will, for me, give me a great opportunity.
Yeah.
I think all of us to give us a long opportunity here at.
Grega has a count like that, and then I think from there, potentially 1485 or so.
Really.
Yeah.
Yeah, and I would love to see a move back down to 1380 and a retest of this level. That would be my preferred way to play the gold market. But one thing that's been so crazy is the silver move. The silver
Yeah.
move has been out of control. But with silver, like, let's imagine gold actually drops down towards the 1380 level. My assumption would be that silver would actually drop back down towards 16 and give us an opportunity to be on the long side down there.
Yeah.
So
Okay.
anyway, just some food for thought regarding the precious metals. Now, Coach, can you do me a favor, since you're probably more familiar with this than myself? Can you look through the Q&A panel and just make sure that we don't have any questions that I can't address? Because I know Steve
We have
answers
none.
questions. Really? Okay.
Yeah.
Well, that's
Any
good.
questions, guys?
Yeah, if anybody has any questions or anything that you'd like me to cover, make sure you bring it to my attention. Let's take a look at these yen pairs, because I was talking about the dollar yen and about how let's just imagine we see some risk off, and Fed's a little bit more little more hawkish than the market wants. The dollar strengthens, but the dollar yen struggles at 109, which means that the other yen pairs could sell off. The euro yen, if you guys have not seen it, the euro yen is at and following Draghi, it fell to the 618 retracement, which is at 120, just about 120 even on the exchange rate on the euro yen. I didn't tweet much last week, but on Twitter I actually posted that chart, and I played the euro yen following the ECB. I bought the euro yen at 120.20, and I sold it at 120.60 because I just didn't have great internet connection. And in the chat room, people knew that I was buying it down here, and I sold it up here in the 60s, somewhere around here. Once we hit new highs, we broke that spike high. I sold it into the strength, and I said, okay, that's it for me. I'm going to go watch, my son practice his soccer camp. But the euro yen showed a really big reversal from that 120 level. Now, what's really important about that is that it did show reversal from there. What's really important moving forward is that if we break below 120, there's not a lot of there's a lot of room to the downside. So if you think about like the euro dollar selling off below 111, and the euro yen just stalling at 109, that could be the catalyst that drives the euro yen below 120. You look at the pound yen. This has just been a huge, this is like a descending wedge, but it's, it negated that. So we're actually nearing, probably, I guess you could say this is channel support.
Yeah. I hear Paulie.
Oh, good. We'll bring Paulie in just a couple of minutes here. But you can see how the pound yen, there's a lot of room to the downside here with the pound yen too, especially if the cable, takes some heat and gets us close to 120. The Aussie yen, this was an inverted head and shoulder pattern that actually did not play out. And we noted that last week that instead of an inverted head and shoulder pattern, it is now it's a wedge, and we're breaking lower. So the Aussie yen looks like we could take on 74 yen again. New Zealand yen, failed breakout attempt above the 73 yen level. And, we break this low. There's going to be all sorts of stops below 71.50. So the New Zealand yen looks like it'll roll over. And then the Canadian yen, as long as we're capped by this this downtrend line, I don't see any reason for the Canadian yen to rally. As a matter of fact, this could set up a pretty decent risk reward for a short near current levels. And I'm not short the Canadian yen. I'm just pointing it out as I see it. So that's something that I think we should keep an eye on, especially if equities decide they want to turn lower later on this week. So Paulie, it sounds like you're joining us, and thank you very much for coming in.
Oh yeah, sure. Can you hear me?
Yeah, we can hear you. How you doing, man?
Oh, I'm doing good. We're actually the cables. I don't know what you're going to call it, stabilizing, but at least it's kind of holding that 161% extension at the 2273 right now. So.
You're a little soft, Paul.
Your microphone's a little you're a little soft. We can't hear you too well.
Let me see, because I had switched some computers around this weekend. I had some technical issues, so I don't know if you can hear me a little bit better. Well, actually, you know what? I'm actually, hang on one moment, because I actually was doing the audio on the.
Are you there, Paulie? You might. Oh yeah, much better now.
Okay, because I usually watch I watch it every day, but I usually watch the webinar on my MacBook, and then on my main computer, that's where I do the webinar. So I didn't have the audio hooked up for that, but
I see. Yeah.
But I am saying that the cable is kind of holding into this 161%. I mean, it just got there, but the one that you pointed out, and we're kind of holding right here. But boy, we had quite the fall here, and Guppy. New lows again. Now we went right through the 134, and
so are you trading the cable or any pound pairs right now?
I haven't done anything with the cable for a while, and I haven't actually. I saw some of the guys in the chat room, Bierksman and Chi. They both, one of them closed out Sterling AUD, and another one I think it was Sterling New Zealand. But I haven't done much with the cross rates. I'm pretty much stuck, with the majors, whether it's, and it hasn't been, all this been pretty much just scalping, whether it's been the euro or the yen. And one of the concerns I did have with the yen, and I posted that in the Asian analysis to start the week, I got lucky in the sense that we had a level that we were looking at from the crossover or talking in the chat room at 881, and I think the high was like 882 or 883. So I was able to get a short off at the time, and plus in the chat room I took half off 10 later and then half off again at 60. But my concern is with the dollar yen. I was talking to some people in the chat room. I really would be careful with this dollar yen because it is the one currency that has diverged from the dollar. And if you see equities, you would think the dollar yen would be way higher. But we've kind of poked around and tattered around for the last couple of weeks. And I think that we could, considering the strength that you're talking about with the dollar index, I think we could go back to that pivot of 927. Now, we may end up just failing there, but I think the market's set up to squeeze some additional shorts at this point.
It's and that's the one thing that I'm wondering if the dollar, if the dollar yen tends to beat to its own
exactly
drum, so because you have to factor in the risk on risk off correlation with the dollar yen. So, and I'm wondering if we, how far that we could squeeze in the dollar yen. And I agree with you. You can see like my resistance zone, if you will, comes in around the 109.10 level. And so I think that upside is fairly limited, but there still could be some upside.
But remember, about a week and a half ago, Kuroda was saying that they're just going to go. He didn't even mess around. He just said they're going full bore ahead with their stimulus. He didn't give a what anybody thinks. He says the BOJ is going on with their stimulus full bore until they get to their 2%. So I mean, I think it's amazing that the dollar yen's been able to hold at this level. When that comment came out, I remember the yen pairs reacted, a little bit, but didn't last for too long. But then again, like I said, with the FOMC and the dollar index looks like it's just going to thumb its nose at the FOMC. I think the only way that the dollar sells off at this point is if we do a 50 basis point or the language comes in, instead of just giving lip service saying they'll watch things, is the language afterwards suggests that they can seriously do more, not just plain lip service. That could be, like you said, the disappointment for the dollar bulls. But Brian, one of those two things, 50 basis point or a more dovish language, it's hard to not see that the dollar, continue to move higher. They said despite any cuts, the dollar is still going to be the highest yielding currency. So people are just easier just to park your money there. And as you said, you mentioned about the euro being this funding currency, and the euro, as Dale pointed out, that rally, it looked like it had a little bit of legs on it, and I thought it might even get to 1208. We had some resistance at 1185, but I thought, okay, it'll probably maybe squeeze a few more people to about 1208, and then we'll start to slide. Then we got to 1185. We hung around there for a while, and all of a sudden, back down the tube she went. So it really does open the door for this euro dollar. Our first initial target is 1079/52, but really opens the door for a move to 110 at this point. So, but I think you're right. FOMC day is going to be a big day, and I think we're just going to have to. I wouldn't necessarily be trying to rush in on the thing. I think, like you said, watch the day play out and see which direction it wants to go, and I think that will set the tone going forward for the next couple of months.
I pulled up a chart here of the Nikkei and the S&P, and you can see the glaring divergence between the Nikkei and the S&P. Which
great eye, Blake.
Well,
yeah.
Well, thanks, Coach. But this is one of those things that if you really want to, pay attention to what like the S&P is doing versus like the Nikkei and how to trade this dollar yen. I mean, frankly, if the S&P comes off, the Nikkei is really going to, I would assume, come off pretty aggressively, and then that in turn should, because this will clue you in what you should be doing with the dollar yen, right? Mm-hmm. So if the S&P decides to roll over, the Nikkei is really going to come off. It should really come off like this. And then the dollar yen, it's obviously a natural short. And then the dollar yen, you probably are looking at closer to a 102, 101 exchange rate than where we're currently trading.
Yeah, and for starters, we got to 78%. I think it's at 630. So, and boy, I think it was about 5 or 6 weeks ago. We saw the yen, and really it came undone rather quickly, not in a fell swoop, but it was just every day it was just clipping along lower. So you're right. If we do see that disappointment, I think the best play of the day is going to be that dollar yen and a move for 630. In the meantime, though, I think leading into that FOMC, and maybe on FOMC day, we have the opportunity to squeeze some people, although our bias chart support today, resistance, I should say, is 891. But I think we'll have some opportunity to potentially squeeze some people. And then you're right. We might see a disappointment if the Fed turns out more dovish and then the S&P sells off. And boy, I think the best trade of the day is going to be that dollar yen going for 630. But in the meantime, people that are short, I think they have the opportunity to get squeezed going into the actual meeting itself.
It's also a very classic example of relative strength and weakness. And to me, it looks like the Nikkei could take out the lows from the end of last year, whereas the S&Ps maybe pulled back 50% on a correction. So definitely the Nikkei is one of the weakest global bourses out there.
Yeah. I mean, well, let's actually compare that to, like, let's put in the DAX.
Yeah.
And you see the DAX is the DAX is recovered, but it's still well off of its all-time highs, right?
So we're the only, I think we're maybe one of the only countries or nations where stock markets are making new highs.
Yeah. And so, if I was long global equities, that would be the thing that I'd be watching the closest, is what happens with the S&Ps, because if the S&Ps do pull back, then you're talking about a much, bigger move, globally in some of these other indices. Correct.
Yeah.
One thing I was going to point out also is the boons. They're not too far away from, once again, all-time lows, which they set last week, right before actually the ECB, in anticipation. They went to minus 50 basis points, but we're not that far away. Obviously, that's going to keep the pressure on for the euro itself. Now, one thing I did want to hit on, one thing I did want to mention, because you made an excellent point about 2 weeks ago. Remember when Trump said we may just go in and do whatever we can to weaken the dollar, and you know that, and Dale knows that as well. That's a slippery slope. Well, as I mentioned in the European crossover webinar, well, the adults came to the rescue. Mnuchin and also Kudlow stated, and Kudlow just recently stated that they will not intervene to, on the dollar in the sense to weaken the currency, because, with the deficits we have, boy, but you talk about the wheels coming off the caboose, boy, would that slide down. And then you get in a situation that you can't even stop the market once everybody starts heading for the exits. And there would be we decided not to, we changed our mind now. So Mnuchin had already stated, well, not as clearly, but is stated that they weren't trying to change anything. And then Kudlow stated in the last couple of days or so that they're definitely not going to go and intervene to weaken the dollar. So that kind of takes that one, concern off of the table for now. But that was one that you said was very important. We could have woken up one day and, hey, we see the dollar a lot lower. But what you don't understand is, or I'm talking about the individual in the White House, is that, hey, things start to go south. Goodbye. You've lost all your credibility now. And then we really hit the exits, and now we're in a lot of trouble. And that's why Kudlow stepped in to go and mention that they, adamantly or clearly that they will not intervene to weaken the dollar.
That's interesting. Well, hey, Paulie, I wanted to see if I could pass it over to you for the last 10 minutes here, so you can take us through some of the charts that you've been looking at on the European crossover. And by the way, Paulie does the European crossover, which is exclusive to the ForexAnalytix community, but also he does a wrap up video that's about 10 to 15 minutes long here in the next 3 or 4 hours for the North American session, which is available for you guys to view. So make sure that you're tuning in to see Paul Franco, or SPZ Trader, if many of you know him from Twitter. Make sure you're listening into Paul, because Paul, I have great respect for Paul. He's lived off the markets for years and years and years, way before the time I met him, which was probably about 6 or 7 years ago when we brought him on the Wise Trade team years back. And he's obviously just a really, really great person to have on our team, because he knows his charts, he knows his analysis, he knows the fundamental backdrop behind most of these moves.
He's a pro.
And he's a pro. So yeah, you should be listening into Paulie whenever you get an opportunity, and especially given the fact that we do offer his viewing of his webinar, especially the one in the afternoon for public viewing. Make sure you guys listen in. So Paulie, thank you very much for being here this morning.
Absolutely.
Great to have you back, Blake.
Thanks, Coach. And guys, I'll see you tomorrow.
Okay, buddy. Good hunting.
Thanks.
Well, Dale, you can see this cable is still continuing to extend, which isn't, it was starting to stabilize a little bit here at the 161%. I don't think we're going to go too much further beyond that. But usually we just, usually with the markets, you'll generally get overshoots. Obviously, a strong liquidation day. I mean, especially if you look over the last couple of weeks, they tried to make a stand, and it kind of rolled over. And then, of course, in that,
Boris Johnson, it's funny that the market has confidence in a guy, and they're expressing their confidence that he is going for a hard Brexit, not breakfast. I'm thinking breakfast, but he's they're saying, basically the market's voting that Boris is going to do it.
Oh yeah, there's no doubt in mind that I think his resolve to go in and break away is just that. And Steve has made a lot of good points. I mean, he was saying one of the things Steve has mentioned multiple times is he would love to play poker against, May, the former PM, because she pretty much, telegraphed exactly what she was going to do. So the Europeans knew that they could be, they could play hardball with her, and she wasn't going to go in and, there was not going to be any changes. And Boris Johnson is going the other complete opposite way. And we may before it gets down there. Usually it's, as they say, always darkest before the dawn. So we may still see some additional pressure, but I think something will come around where they reach some kind of compromise or whatever. But once again, going back here, I wanted to go on and mention, as you were talking about, and you yourself gave some good comments on the Dalian. I always listen to you every morning. But as I mentioned before, and let me pull this back here.
Yeah, you're looking for a short here.
Well, I actually did a short here in the chat room, and some of us came in at the level I was talking about, which was 881, and I did that on Friday. I did a scalp, took off 10 on half the position, another 10, and I was glad to go and get out, because here's my concern. I think that it was a good little short there for a scalp short, and actually, went lower. I usually don't stick around, so we did make it down here into the 40s, so not bad, close to almost 40 pips. But I mentioned in the chat room, I really wouldn't, and I mentioned on the European crossover webinar, I really would be careful. Boy, this was really frustrating. I remember I was so bearish the dollar yen up in here. It was not funny. And I remember taking on a position. I remember getting stopped out right in this move. And I was really ticked off. Eventually came in and jumped in a little bit, but man, I was so sure this thing was going to roll over. So it kind of ticked me off. I got stopped out. I remember thinking, and I eventually jumped in a few more times, but I was, really, frustrated that I did, and probably should have just jumped in and just hung on. But I thought we were going to get a move down to the pivot, which is 927. If you look down here, you can see it's very important level here. And what I do is, people always ask, what do you put your trend lines right up in here? Why isn't it more important to put the high or the low? And I always say no, because I go through the bodies, because that's where the volume is at. Okay, so
great point.
That's where. Yeah, so that's what I do. Now, if you're day trading, I'm going to say if an event like the NFP, non-farm payroll, yeah, you're looking on a 5-minute chart or a 3-minute chart. Yeah, you're going to put on the high and the low, because that's going to be significant if you're in day trading an event. But like I said, this is where all the volume is going to go and be. So you can see the importance of this 927. And I thought that's where we were going to go to. And sure enough, we ended up breaking down here, from here down to that 927. We broke lower. And you can see here for the last couple of weeks, we kind of dilly-dallied around. And we've opened the door where we could push a little bit higher. And we were holding up very well against that 832. A couple times we bopped and we just rolled right back over. That was our resistance on the scalp charts. But I moved this up here, and I thought, I think we can get above that. And I was saying that, I think it was on Friday morning, and we did make it up and took a scalp short. But my concern is now the strength that you're seeing here, and to put things in. Let me see. Would you turn constructive back over the pivot at 920 or something like that? Well, my thought is, we, like Blake said, I'm going to see what happens then, but I think we can get there. And here's my concern is, look at this dollar index. I mean, it is just keeps going higher. Now, today we have our bias chart resistance at 98.29. Right here for the cash dollar index. 98.12, you can see the market kind of positive. That is a previous bias chart resistance from a week ago that we had, but I'm like, this thing still wants to chug a little bit. So putting it for 29, it may not even get there today, but I think we will end up getting there FOMC. But my concern is, getting back to the dollar yen, is you look at the strength here with the cash dollar, and I'm wondering, how long can the dollar yen keep the lid on? And my concern is, going into the FOMC, that you're probably going to see continuous dollar, not necessarily by buying, I'm saying, but the shorts having to cave in. And that may ultimately easily push us to that 927. And whether, like I said, depending on what happens, the market's fully priced in a 25 basis point cut, we could jump up here. But like Blake said, if you get a disappointment, this is almost reminiscent of what happened to me. That's what I'm saying. I remember this clear as a bell, talking about, oh man, this is crazy. I'm telling you, this dollar yen is going to go lower. And look how it was hanging around here playing possum. Yeah. Man, it's going lower. I'm telling you, it's going lower. And then I ended up getting stopped out. And it wasn't too bad. I think it was stopped out like around 12.22 or something. I think this doggone thing popped up to 12.42. And then we kind of hung up there. And then we turn around and go lower. And I know people were talking about it's going to 114, 115. I'm like, no.
I remember.
And sure enough, we felt
you and I were bears up there, buddy.
Yeah, I remember you being there. Yeah. And my take was, no, we're going to the pivot. 927, we're going to the pivot. Well, we did go to the pivot. But what I'm thinking is that we can come back up to this pivot based on just some short covering that people have just knocked out of the position. And then maybe, as Blake says, ultimately the dollar does disappoint after the FOMC. And if we start rolling over, then I think we can come down here to 630. I remember about a month ago, or maybe 6 weeks ago, you yourself were talking about 625, 650 or something like that. Well, this 630 would be the 78% of the flash crash low in January to the high back up here in 1242. And when the euro, when the yen wants to sell off, you can see it. It sells off in pretty good little clips here. You see what I'm saying?
Yeah.
And then another chunk come up here, another chunk. So I think that to me, if someone's looking, what's the best play going into FOMC as far as a reaction? That, like I said, you yourself mentioned it. I've been in the same boat myself. Don't be a hero because, like I said, you end up just getting your teeth kicked in. Let the market do the work for you. So lots of times that happens with me on FOMC day, ECB day. Sometimes I'm trying to, 10 minutes later, I'm going to try to jump in and do the reaction if I don't even do it even sooner than that. And then you end up seeing the market kind of play itself out a half hour later. And you're like, man, if I would have just waited. So my thought being,
I love that line, Paulie. Let the market do the work.
Yeah, because that's what I'm saying. Because you end up
natural mentoring.
Well, it's not only that, but what I've found out myself is when you come in that quick, you're jumping, you're long, you're short. And I scalp a lot, but you're long, you're short, you're back to long, and it throws off your. It's the old saying, you can't see the forest for the trees. And then after a half hour, you're like, the next day you're like, oh wow, that was so clear. I could have put on this position, not thought about it. So you lose the perspective when you come in so quickly, and little by little learned is that, hey, just wait on these big events. You don't have to. Yeah, it's nice because you'll see a quick 40 pips here, 20 pips there, back to 30 pips. But then you end up, for all the work, and you're exhausted within a first half hour, you miss the bigger move that results for the next few days. And I think that would be the case. And once again, not to keep on harping on it, and I think it's going to be the real telltale where some people might get squeezed up into here, and then we might see a disappointment. And then if the S&P sell off and so forth, a couple other markets, then we do see this market come off. Then I think, we ultimately could get there. I'm not saying we're going to get there automatically, but I'm saying is the risk is that we come up here and stop in light of what's going on.
And then go to the 78.6 level.
Yeah, then go to the 78 on the disappointment.
Okay.
Look at this cable. It's still coming, unglued here right now. We'll go on and take a look at the cross rates. Blake had mentioned that. Actually, I'm now on the, and I wanted to reference this also. You see the bonds. This happened, on ECB day, and we quickly came off and we're coming back up again. I've mentioned it time and time again. It's hard for the euro to get any kind of a footing when you've got the bonds going to lower rates, obviously higher price inverse relationship. And it's basically, is true like a ball and chain. So how's the euro supposed to get moving if the interest rates here for the bond keep going lower and lower? So it just opens the door for this dollar index to move higher. And don't forget, the euro comprises 56.4% of the cash dollar index. So it has a great weight. So, obviously, the cable is important too. We're certainly seeing that effect here. But
you have a couple of questions from the community. You have any view on any of the CAD pairs here, Paulie?
Let me go and switch in. Hang on one moment. I'll switch over to. One moment. I did a new computer setup, and all my monitors got all crisscrossed. But I think you can see the cross rates, right? Correct now? Yeah. Okay. Yeah, I see it here on the MacBook. Okay. On the CAD pairs, I don't look. These are the cross rates that we do. If you look here on the, let me get this for you.
Well, your bias chart.
Yeah, the bias chart. Hang on a moment. Let me put this here. And these are the markets that we cover. Now, like I said, the rest of the gang, Steve, Stelios, Grega, they look at the different rates. Also, I'm talking about other cross rates. I know that Steve was real big on the CAD yen. This was about, him and I had a discussion. This was when it found a temporary bounce or something. I think he was still bearish at the time, if I remember correctly. And I looked, I said, hey, look, it looks like we have, I don't know if it was a long-legged doji or something. And sure enough, we got a little bit of a bounce, but he said longer term, if I remember correctly, he was bearish, if I remember the take on that. But like I said, of the cross rates, these are the ones that we look at here.
Okay.
So I don't do anything with the CAD pairs, but one that has been, as I said, you can see here with the guppy, has really. And I'll pull it up in the daily chart for a bit more perspective. And that's here with the guppy. We saw a nice little rally here. I mean, this thing had been really, like you can say, this is like the submarine horn. I mean, it'd been down, 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 down. And we saw a nice little rebound. I mean, a very nice little rebound. And then look how quickly it gave that up. And one of the things that, I like to day trade and scalp a lot, but one of the things that I think that people should look at is that when you see a market, and this reminds me of what Blake used to talk about, price structure, because you can see a market that's been very, very bearish, and then you start to see a market, and it's hard to tell on the daily. You've seen it more clearly on the 2-hour, but you see a nice jump. And then when you see a disappointment, because look how you had this engulf not only this day, and I'm looking at the bodies because that's the most important. Next day, you generally see the market sentiment completely changes for a lot of reasons. People that were bullish may have were bullish or caught in the wrong place. People who were short may have ended up getting stopped out. And so what happens is you get, almost like the market times 2, because then people end up getting knocked out of their positions. People end up wanting to go and get short again, and you generally see this good follow through. But we are seeing, if you see this, and you're seeing this happening across all the sterling pairs. Look at the sterling odd. I think I saw in the chat room it was Chi that just covered for a nice fill on here. And Blake had mentioned it too while you were away. Amanda's just been dead on, but it's just she has been, she does very well in these cross trades, but she has been so adamant as to what the sterling was going to do because of these concerns. And that's where people can also, you can look at something from a fundamental situation, and then you can apply the technicals. And doggone it, that's what she's done. She has been bearish for the sterling for months and months. And months.
She has.
Yeah, I mean,
so people need to join to hang out in our member chat room.
They should. Seriously,
could have rode the cable with Amanda.
She has taken the fundamental view, and she has stuck to that like a rock. She has used her technical patterns. I see them here in the chat room. She posts a lot. She shares a lot of charts, posts all her entries and her exits in real time. So that's what I'm saying. Is you're missing a lot if you don't. Amanda's doing the European hour. She is still around in the U.S. session, but once again, like I said, she has been for fundamental reasons so bearish these sterling pairs and done really well across the board with them.
Paulie, let me just check to see if my guest is here. I don't think he is, and if not, I think we could wrap it. It's okay. Justin Waite, are you here? I thought I saw Justin earlier. He said he was having problems, technical issues with getting in here. Mm-hmm. Justin, if you're here, maybe you could send a question to chat or the question. I don't think he is. So, if you want to just wrap it, Paulie, going into the Fed, we could call this.
Jump back into that screen. I didn't even know, the time went by quickly. Holy smokes. Hang on. Don't get me chattering. Hang on a moment. So that was my take on the dollar. And you can see one of the things is and I want to go and point out one of the things that we use a lot in FX, and Blake is coming back out with he's redone the web, he did a video previously before, a very popular video. It's on how to use Fibonacci. I think he's updating that, and it's going to be made available again. Man, you got to watch that. That really helps and set me at looking at things by using Fibonacci with Forex, and he goes in more in depth. But one of the things you look at is when people might say, well, look, I thought it was going to be 161%. That was going to stop the market. Well, as you know, with technical analysis, you're going to get overshoots. Nothing ever, sometimes with scalps and stuff, I'm looking at levels and I try and do confluences between those levels and the fibs, maybe some other technical piece, but you do get these overshoots. But what the technicals do is they allow you to determine what your risk is. And you always have to figure in, you're never going to catch the high. You're never going to catch the low. You just try and get an area that you can come in at a price target for your risk, and then allow, depending on the circumstance, allow for that risk. Obviously, if you're day trading or scalping, your risk is a lot tighter, but you're jumping in and you're a lot more aggressive. In a massive sell-off like this, you'd be crazy to step in and say, well, I'm going to put 10 pips. I mean, they're going to knock you out of the box because the market's so, has so much force. But you can see here that, right here at the 161%, as Blake said, there's no reason to buy it. Okay. You'd only want to sell it. But if you're short, or if you were shorting, you'd say, wait a minute, I've already reached the market's already reached 161% extension of the last 2 weeks range. Why don't I just go on and wait until I can see a better rally? So that's where it's going to go on and help you, because once again, with technical analysis, I know in equities, I was watching a good video, by some of the guys they were talking about how they use, which I've used it also, is the volume as far as VWAP, and with FX it's hard to, because like I said, it's a spot rate, but you can use those technicals to help assess what your risk is, and with good proper risk management. Blake also did a good video a couple of years back. I don't know if he wants to do that again on using proper risk management. But this is a way to use the technicals, and each one is different. I don't use RSI. Blake does, so I just want to touch on a couple of things. I use exponential moving averages, and I see that the market, it keeps me, quite often I jump in and out too quickly, and what the exponential moving averages do is they keep me on the right side of the market from jumping out maybe too early or too soon. Even when I'm scalping, at least it helps me, determine what my risk is, or maybe I should be a little bit more patient before I come in and I try and find the markets. One of the ones that we did have, which was the Canadian dollar, all last week, I was saying my target is 31.90. Kept saying that throughout the whole thing. We had a short-term target on that Monday of last week for 31.62. And we nicked that out, and that worked out rather well. But mine was 31.90. We're going to 31.90, and sure enough, we made it here to 31.99. And I said we would see a significant, pause. We've come off almost 50 pips, but from the high, we're kind of hanging around here. We're still holding here. But once again, be careful, like I said, going into the FOMC. But we've had some nice calls here on the dollar CAD itself here. But once again, I think that be careful with this one, although this one isn't set up as well as the dollar yen for a squeeze. But then again, we had actually reached our target, which was 31.90. I think Steve was talking about 32 when I heard him with you on the Face webinar. I think it might have been like Wednesday, if I remember correctly. But I'd been looking for that. This was my target, our scalp target on Monday. Once again, like I said, if you're here with ForexAnalytix, take a 10-day subscription for only $1. Not only you have the access to the chat room, all the different disciplines, whether it be harmonics or basic technical or macro or Elliott wave. Find out what works for you. And then, like I said, we do our webinars. I do the European crossover webinar at 4 a.m. Eastern. But it lasts about an hour. Stelios records it and then plays it again about an hour and a half before the New York Open. In the chat room, the link's available. It's shared later on, but it's not shared till about 10 a.m. Eastern. So, but
your second webinar is going to be on the same time as the Fed decision.
No, Wednesday. It's not. It's not.
Oh, okay.
No. I'll be in the chat room. And we'll be, which, like I said, the great thing about the chat room is everybody helps each other. Helps each other out.
Community.
The daily wrap up is at 12:30, 12:30 Eastern time, and what we found is that works well too, because sometimes unless it's an event like this, sometimes we'll see the FX markets start to quiet down, right after noontime a little bit and or quite a bit, and it also allows the European traders, at least the ones that I usually work with a lot, allows them to go and catch the daily wrap up. Now, it's also made available as a recording. Once again, the access to that webinar is free. But like I said, we have it at 12:30. But at the time of the Fed, I'm going to be in the chat room, and like I said, chat room is where we'll be helping each other out during that time. But we'll have it. We'll have that leading into the FOMC. But I guess the two ones that I'm concentrating on is going to be the dollar yen, obviously the euro. But we've looked at the euro, and we'll wrap it up with the euro right now. What we've been looking at, and I thought potentially we were going to get there. And this is a good thing about the chat room too, which kind of made me laugh afterwards. And I'll tell you why, was on ECB day. We had the analysis and we were looking, here's that 1079. If you back this up further, and on our analysis, we're looking potentially for a move to 110, but we do have a little support level here, 1079/52, but 1079. And so on ECB day, I'm thinking, I even scalped short, as the market just kept dropping. It was like, well, heck, might as well just go and take it. So I jumped up and grabbed a few pips too before, the ECB announcement just kept falling. We finally got in there. And the market kind of kept holding here. I'm thinking, okay, well, Draghi's going to give his negative tune, and we're going to drop down to 1079. Well, the market ended up holding here, and it starts moving higher. And I think it was like on a 10-minute chart, it formed like a minor gravestone. I'm out in a little a hammer bottom. And one of the guys he was even getting long too. I'm thinking, you know what? I'm not going to ignore the technicals. I'll get long. Hopefully this thing doesn't turn around and drop back. And I think Draghi was already talking, but I kept thinking, wow, I thought this thing was going to break below 11. And then one of the guys, about an hour in the chat room, mentioned, it was after the euro. The euro was already up like 11.4 at that point, 11.40. He goes, oh, by the way, there's $20 billion worth of options at 111. I go, well, gee, thanks. And I didn't even I didn't even know that there was one expiring, but $20 billion. Well, no wonder there was defending the 111. If you had $20 billion on the table and you're going to lose that $20 billion, if it takes it out and holds below it, then there was a good reason, obviously, for the market to hold that. If I had known that, I would have.
A very important thing for people to follow is that, what I say about options, Paulie, options are like relationships. 90% of them expire worthless. So the guys that are the option writers, it's amazing how they could pin a market into expiration to collect as the house, the premium from the buyers.
Great point, but here's the thing behind that. Here's the deal, and obviously it's probably not retail traders that are holding that market. If these banks here, if you're defending 111, you're going to keep buying that euro to make sure it doesn't get below 111. That's information, and several sites on our daily FX, I think they posted. I have one of those services where they have it. I didn't even think to even look about that because I was so focused on the ECB. But that was a good thing to know that, the market's already forming a pretty good, strong little, on a scalp basis, a little bit of a defense here. You could figuratively, you probably didn't want to load the boat, but you could have come in a little bit heavy knowing that you got some banks backing you up at 111 that don't want this market to get below 111. If it gets below 111, they're going to keep buying it. You see what I'm saying? Because it's in their best interest, because then they end up losing the money. So then, of course, we saw that big rally all the way back up here, not big rally, but made up to like 1186. And then we eventually rolled lower. So, but that's about all I've got here.
Okay, Paulie.
Euro, but hopefully
appreciate you stepping in, and it was really cool hanging out with you and exchanging ideas. I really like what you say about technical analysis, that you don't expect perfection at the crap table. Just try and take a piece out of the market, and most of all, guys and gals, don't just count your pips, count your blessings. Thank you, Paul Franco, for being with us, stepping in today. And you got to catch Paulie. As you can tell, he lives, breathes, and is passionate about trading, and it's infectious. So thanks again, Paulie. Thank you, Face. We'll see everyone for Turnaround Tuesday. It's going to be a dramatic week. So keep your powder dry, and we'll see everyone tomorrow. Thanks again, Paulie. Adios, everyone.